Can big tech keep up its record-breaking streak, or is a correction looming? Dan Niles, founder of Niles Investment Management, breaks down what investors should watch as tech giants prepare to report earnings.
Side, right? You saw that with Netflix. Stocks down 5% the day after they report. It's down 2% since that. And if you look at yesterday, I mean, I saw the Google numbers yesterday. I mean, I was leaning positive coming into it. I wrote about that. And I thought the stock would be up 5% plus. It was up just barely 1%. Now you can say it had a 10-day, it was up 10 days in a row shortly before that. But it's still not up that much year to date. And if you miss, and IBM didn't really miss, they just reiterated guidance. The stock's down 8% yesterday. Honeywell, Dover, they were down 6%, 2%, beat and raise quarters there. And so a lot of this, I think, comes down to positioning. And Google set a really high bar. I mean, that was a very good report. So I'm seeing the stock reactions and what you exactly said, Sarah. These stocks have had a huge run up. Multiples are high across the market. You have to be very concerned if it's a consensus long. So that's kind of how big picture I'm approaching it.
Do any of them, do you like more than others? I think Microsoft was one you were eyeing.
Absolutely. Yeah. So specifically, Microsoft, I think, is the best one, partly because they had such a rough time last year. If you go back to last year, when they reported the June quarter, Azure was a disappointment. Then they reported the September quarter, Azure was a disappointment. They reported the December quarter, Azure was a disappointment. Then they did the Stargate deal where they restructured their agreement with OpenAI. And the March quarter, they actually saw Azure reaccelerate. It grew 2% faster than it did in the December quarter. And I think you're going to see that continued benefit as you go into June. And then with Nvidia, don't forget, they had that massive write-down. I got bullish on that after the write-down. And now China comes back into the models when it got taken out of the models. And you're seeing CapEx now really strong, driven by inference, which is much more sustainable than training, right? Because we all want answers to our questions, right? We don't care about the training. And so I think you're going to see that continue to do well. Obviously, they're off quarter. But the ones I'd be concerned about are the ones that you potentially have tariff-related impacts that could skew what the guidance looks like. Because the issues with a lot of these reports have been, well, if you're saying there's a pull-in, you've got a problem. So Amazon, obviously, lots of products sourced from China. I'm sure the quarters are all good for all of these companies. But like an Apple, what do they say about pull-ins? Even though I'm sure they're going to have a great quarter as well. And so Microsoft, by far, my favorite for next week. Obviously, everybody expects good results, which is the one concern. And then Nvidia, those are the two favorites of the Mag 7 that I have.
Hey, Dan, it's David. I want to come back to something you'd said, which is positioning. We sort of hear it here and there as an, as a excuse perhaps for movement, but it is important. I mean, you got all these pod groups at the likes of Millennium or Citadel and so many other firms, a handful of people who basically are trying. Explain why it's important. I don't know to what extent you're kind of, you view it before sort of trying to figure out how something's going to move after earnings. Because to your point, Alphabet numbers would have appeared to have been strongly met, given it was a very good quarter on a lot of the metrics that are followed.
Yeah, and it's never quite as simple, David. So I kind of look at Alphabet, and I was like, oh, I'm going to do very well on that. And then you're like, it's only up 1%. Now, with Alphabet, you can say, well, I do have a judge's ruling coming out on antitrust remedies for them in August. And so what happens there, which I don't think they're going to be allowed to be the default search engine for Apple, which obviously then will have implications for Apple. And so you can say, well, is that kind of influencing that? But then you look at, Honeywell, Dover, Flextronics, IBM, Netflix, which really started this off last week, right, where it dropped 5% the next day, and it's down another 2% since then. And you look at this week, and I was looking at that coming in, healthcare, energy, and real estate are all up 2 to 3% this week, excluding today. And you go, the S&P's up 1. And so it's one of these interesting situations where you're seeing the market having problems with maybe some of the winners coming in, but then rotating into laggards like healthcare, which is up like 3% in 4 days.
Yeah,
and so
they're running out of buying. To some extent. You've mentioned Apple a couple of times. I am curious your thoughts there, specifically whether they're going to be hit by tariffs. Obviously, some of the other concerns that remain as well.
Yeah, I mean, with Apple, it's pretty clear there's a pull forward in demand. Now, whether they admit it or not, we'll see. But you're going to see a full impact of that on margins, or more of a full impact of that as you get into the September quarter, and then you go to, and then obviously as you get into the big quarter, which is December. And so for all of these names, and Amazon's the other one, right? You go, well, how much is tariffs going to impact Q3, even though probably not much of an impact in Q2, because the CEO has said there was a lot of pull forward from his suppliers to get in front of the tariffs, so probably not an impact on margins in Q2, but probably into Q3. With Apple, I mean, to some degree, the best thing is that they've been so bad the last 3 years, right? Revenues are up 5% in total over the last 3 years. The stock's up 20% since the end of 2021. The Information Technology Index is up 69%, and the S&P's up 34%. They're woefully behind in AI, and if they would just spend $30 billion to go buy Perplexity, right? They're planning on buying back $100 billion worth of stock. A 1% move in that stock at $3 trillion in market cap would more than offset the cost of actually being somewhat credible in AI, which they completely are not. So that's what I'm hoping they do. I'm not sure they're smart enough to do that, given their last big acquisition was Beats. But
$3 billion, yeah, I know. Everybody wants them to buy Perplexity.